Hey everyone, in this video I want to compare the two cruise ship companies here, Carnival Corporation and Royal Caribbean Group, and I want to answer which one I think is the better stock to buy right now. So to answer, I'm going to look at revenue, profit margin, cash flow, and valuation to come up with the answers. So let's get right into it here, starting with revenue. And what is glaringly obvious when you look at this chart is that huge crash in 2020 for both of these companies, and that was because they were forced to shut down their operations as a result of the pandemic. So with no ships sailing, their revenue absolutely collapsed, hit zero, and then now it's rebounding sharply. And Carnival Corporation almost recovering back to its pre-pandemic levels of 17.5 billion in revenue in the most recent 12 months. Meanwhile, Royal Caribbean has already surpassed its pre-pandemic peak at revenue of 12 billion. Consumer demand for travel is absolutely soaring as they are unleashing this pent up demand to get out of the house, and two of the companies that's benefiting strongly is Carnival and Royal Caribbean. The next thing I wanted to look at is their operating income over the trailing 12 months, and Royal Caribbean generated 1.368 billion of operating profit, almost back to its pre-pandemic peak. Meanwhile, Carnival still has some room to go, generating an operating loss of 1.465 billion in its most recent trailing 12 months. But these two businesses are improving so rapidly, I wouldn't be surprised if Carnival quickly surpassed in operating income, reaching back to positive levels very quickly. The next thing I wanted to compare these two on is the long-term debt in relation to free cash flow. Remember, in order to survive those shutdowns during the pandemic, these two companies raised a lot of capital, some in the form of debt, some in the form of equity, and so their balance sheet, their debt, you can see how it exploded from less than $10 billion in long-term debt. Now they each have more than 20 billion, with Carnival at 34.5 billion of long-term debt and Royal Caribbean at 23.4 billion of long-term debt. Now looking at their free cash flow, Royal Caribbean is doing well, 1.8 billion in the most recent update free cash flow, and each of these companies has been using whatever money they can put together to pay down some of that debt that they took on during the pandemic, because they had to pay very high interest rates, higher than usual, to take on that debt because they were much higher risk companies at that point in time. So by using their cash flow to pay down that debt, it's going to have a several times positive impact on the business, because it's going to lower that interest expense, which is going to increase cash flow, which is going to leave more money to pay down more debt, and so on. That positive virtuous cycle can go on for a several year period because they've got so much debt, and so the companies can continue making exponential progress in profitability even if their revenue and profit are at normal levels. Finally, I wanted to compare these two on valuation, and judging by the forward price to earnings ratio, Carnival is more expensive at a forward PE of 15.85 compared to Royal Caribbean at a forward PE of 11.95. So if I was to pick one of these two cruise ship stocks to buy today, I would pick Royal Caribbean. The company's made more progress recovering from the pandemic and is trading at a cheaper valuation. So that would be the one I would choose today. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.